Now, on to market movers with options and futures trades coming from the pros at CME Group.
Welcome to Market Movers. I'm Jim Iuorio with Scott Martin.
Hi, Jim.
So we are at one of my favorite times of the quarter, which is Tech Week.
Okay.
Which is
I
next
thought
week.
it was this time. But
yeah. Well, when you look at Tech Week, when you look at earnings season, is Tech Week the only thing that matters?
Well, to some degree it is, because of the fact that tech has driven up this S&P 500 and, of course, the NASDAQ, as we're going to talk today, most of the year, certainly. So, Jim, as tech has gotten more involved, let's say, in those indices, yes, of course it drives price.
See, I think it's about 60 to 70% of the whole earnings season is Tech Week. Now, when you look at what's the most important name in the reports, it's got to be between Amazon and Apple, right? And if so, which one?
Yeah, I agree. I still think it's Amazon, because of the fact that Amazon is both tech, with obviously some of the web services and things that they have, and also retail, which is something that people should be very concerned about if they're looking at buying or selling stocks these days.
I agree with you quite a bit on that. Now, before we dive into our trade discussion, I'd like to point out that these are examples, not recommendations or advice. When we price it out right now, the NASDAQ was trading at 79.40. Scott.
79.40, Jim. You know, we keep coming on these shows and talking about these levels, and I just can't believe some of these numbers these days, which actually, as a trader, makes it a little difficult, I believe, because we're in, as they say, uncharted territory with a lot of these indices. So when you're looking at the charts, it's interesting to figure out places where you might want to buy and sell because of the fact that we've been in new water. So, Jim, I did, despite that, just for your reconciliation, I did find something interesting for you today, my friend. So as an example, I'm looking at buying the NQ 7950 8,000, yes, 8,000, my friend, call spread for 25 ticks. This trade risks 500 to put on to make potential 1,000. Now, in my typical fashion, Jim, I'm going to find a way to pay for that by selling an NQ 7650 put for 25 ticks. So therefore, making my outlay zero, but my risk of getting long at 7650. Now, this expires July 31st. You mentioned the underlying at 79.40, but it gets us through a couple big events. Your favorite week in the tech week, also one of my favorite earnings companies, which is Apple, and the Federal Reserve, my friend, the big Fed decision at the end of the month, and therefore you get through all that stuff, maybe get some more juice into the market, some more excitement, and therefore I'm hoping that call spread fills out that I have paid for by selling that put. Any thoughts?
Yes, no, I do stuff like this. I know you do stuff like this with success too. Going through that Fed, if the Fed disappoints, you're going to probably be long at 76.50, right?
I hope not.
I hope not too, but we could. That's where your risk lies.
That could be a big catalyst. Very good point.
If you're willing to accept that risk, if someone's willing to accept that risk, as long as they know it, then that's fine.
But I'll throw something in really quick. If we do have, let's say, lousy earnings or a string of disappointing earnings out of tech land going into that Fed move, hey, the Fed pays attention. Maybe that's why they cut too.
Good call.
Thank you.
Good call. Okay, I also am somewhat bullish the market, and that's not going to surprise you because I've been bullish the market mostly.
Well, you've been correct, Jim. I get it. Just
and
rub it on in.
No, and I've been mostly correct. Not all of them, though. But I'm looking at the micro. That 8,000 level, which is the top of your call spread, I think is the breakout level. So I think a trade of 8,001, I don't know if I was trying to be cute when I put 8,001, but I meant is just over that as a stop-in level to be long the micro NASDAQ with a target of 83.01 and then a stop place below at 78.10. So it risks 382 to make a potential 600. Now, when I use the micros, this is a longer-term trade. I know that stop-in is 50, 60 ticks above where we are now, which is nothing. That's yesterday's high. That could be relatively quickly. But these are trades that you can spread out, watch longer, and have less at risk by using the micros. Thoughts?
Yes, and other levels, if they do come into play for your expression, you can also use micros at other levels, too. If suddenly your outlook changes, if some of the movements, some of the price indicators say, hey, we should maybe move up that stop out, whatever it is, you can also change that up, which I like about the micros, which I've done as well.
In a word, the Fed, quarter tick? Quarter tick, I believe that too. Thanks for joining us on Market Movers. I'm Jim Iuorio, where we are helping to make you a better trader.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.